who is the fund manager equities at Principal PNB Asset Management, is now joining in. Dhimant, good to have you on the show. Thanks for joining in. Now, first things first, if you're looking at broadly the earnings season, what is your takeaway? We're almost 3/4 done through the season. Does it leave you satisfied with respect to the expectations?
By and large, it was coming from a low base, so to some extent it is satisfying, but then there were pockets of worry as well. So, the provisioning in as far as the PSU banks go continues. Most of the staples, particularly the FMCG, reported very strong numbers. IT pack was okay. So I think net, I think the earnings season so far has been reasonably good.
Okay, just a couple of more stocks seeing intraday accidents. Just pull out the intraday chart of TV18. That stock now down about 6%. Again, FNO stock. Standard disclaimer, of course, owns the channel that you're watching. But just look at that stock. 5.5% lower is what we have on this stock right now. So just keep an eye on the screen. Dhimant, hi, good afternoon. So, looking at your large cap fund, what's interesting is that, it looks like you have a bit of an underweight on banks and quite a bit of overweight on autos. What explains that call?
So I think, the same conundrum as if you're slightly more bullish infra. I think if you see the cash flows and the growth, infra space, you have to be very specific, but a good proxy nevertheless is cement. So using the same analogy, I think if you have to play the rate sensitives, I think auto per se possibly sees reasonably good demand, and the entire space has seen reasonable demand growth. So I think we see that continuing for some more time.
Dhimant, when it comes to banks, I think names like ICICI, SBI are still part of the portfolio. What is your sense? I mean, are you in the camp that clearly believes that the worst is perhaps now finally over?
Sorry, could you repeat the last one, please?
I'm talking about corporate-facing banks like ICICI and State Bank of India, Dhimant, and what your view is. Do you believe that the worst is indeed over?
Purely numerically, possibly it's, getting into the last leg. It appears so. And with the NCLT and so on and so forth, the resolutions likely to happen and some of the cases likely to be resolved, I think it, gives you some amount of confidence back. And in particularly ICICI State Bank possibly would be the first ones to recover as such. So I think somewhere, maybe a quarter more here and there, but I think, we should be close to the recovery phase.
Okay, you have across various funds a lot of exposure to consumer non-durables. That space has done well, but in terms of valuations, still looks quite expensive. But you think we should avoid looking at valuations, at least in this space?
So I think at this point in time, possibly it's a question of choosing between surety of growth and something that is unsure of growth. So I think maybe a slight premium, yes, but if you're kind of confident enough or the probability of getting growth is reasonable, I think we should possibly be aligned to those names.
Dhimant, you seem to like gas as a play. I can see GAIL, Petronet, I think even Mahanagar Gas. A couple of these stocks have been part of different funds. So, there's gas on one side. There is also oil marketing on the other side with oil prices at 80. How are you viewing both of these components of the energy basket?
So till recently, I think the equation was pretty okay. I think now one will need to question whether the marketing margins will remain intact as far as the OMCs go. But as far as the gas companies go, I think there is still room, and in this environment possibly one can see a a small leg up in terms of the earnings for the gas companies. Plus, I think tendering for a lot of cities would open up, so it would mean the incumbents would be favorably placed. And you know, it's a good proxy for again a reasonable growth or rather surety of growth in the space.
Okay, all right, Dhimant, we'll leave it on that note for today then. Thank you for joining in and giving us your take on the different